Good evening. If you guys could let me know how the sound is, if you guys can all hear me good. All right, it's loud. Well, good. Sound is good. That's great. So hopefully we don't have any technical issues tonight. We worked really hard on resolving everything within our ability. After our live stream last week, I did get on the phone with our provider and I did let him know that it was totally unacceptable, and I am in the process of filing several complaints against them for the issues, because it isn't the first time we've dealt with them. But that is water under the bridge. But it is good to have each one of you here this evening. It's going to be a great evening. We're going to discuss some charts. We're going to do Q&A. We're going to talk about some interesting things, some up-and-coming developments for the community, which we're really excited about. So glad to have each one of you, and we should have more joining in shortly as the link goes out and people log in. So just a couple things, housekeeping as we get started. I'm going to ask that if you have a question that you keep it until the end when we do Q&A, unless the question is directly related to what we're discussing on the chart. So if we're discussing a specific chart and something doesn't make sense, feel free to drop a question in the chat. But if it is related to something else or another pair, then please hold off on the question until Q&A. We would really appreciate that. I also ask that you keep the comments kosher, that you respect each one of the other members in the chat. We're not here to ridicule anyone else or put other people down. If there's something that needs to be said, we can say it in a polite manner as much as possible. So please keep that in mind. We want to respect each other. We're trying to build a community that supports each other, and that's what it's all about, guys. We don't need to take anyone else out to be successful. So I think that about does it. If you do notice something in the comments that is completely out of whack, just go ahead and report that so that we can have that taken care of. Alrighty. So let's go ahead and get into some charts here. Just give me a second. For some reason, TradingView wanted to reload on me, so let's go ahead and we're going to start with Bitcoin. Let's do that. All right, it should be loading the chart here. So there we are. So we're here on Bitcoin. Alrighty, so what we talked about last week, and just as we dive into this, I just wanted to digress slightly for a moment. This live stream is, we put this together and we did this last week and we're doing it again, primarily for the students in the course to assist them in their learning. But we also wanted to release it to the public just to help anyone who can be benefited from this. We really do care about the community. We do care about helping people to understand and learn charting. So that's why we're releasing it public and not just for the students. But if you are a student and you are going through our course, this is going to make a lot more sense to you. So if there are things that just aren't quite clicking for you, that's probably part of the reason. Our course really goes in depth with that. So just wanted to mention that. It will obviously help you a lot. All right, so as we mentioned last week, we are in a descending channel. And pretty much what we told you last week has been playing out. We're still waiting for this to develop a little bit more. But just a couple things to look at as far as what's going on, we're going to jump down to the lower time frame. So a descending channel, we're looking for a break to the upside eventually. But what is important is not so much the break, because a lot of times you'll hear traders, YouTubers, and they'll talk about, oh, we broke out of market structure, we broke the trend line, and they make a big deal about it. And what they don't understand, and it's probably not necessarily their fault because this is widely taught, is that it really doesn't matter if you break a trend line. It is not actually breaking market structure unless it's an impulsive break. And you'll find that we didn't break this in an impulsive manner. We didn't break it in a bullish manner. So it does not invalidate the bearish sentiment we're in. It does not invalidate the bearish pressure we are under. And so when we see this, we are looking for a continued bearish push downwards. That's the most likely scenario. Now, this could change, and this could be invalidated. We're not perma-bear or anything like that. We're just looking at the chart and letting the chart interpret it itself. And if you do that, then you have to be honest. So let's jump down here to the lower time frame, and I want to show you something because I feel like this could help you guys out a little bit. So you'll notice several things. First of all, I have two trend lines running right through price action, but we're going to focus on this trend line because this is the most recent, and I want to explain to you something about this. So before all this happened, this whole area here, and I can circle it just to make it a little bit more clear. So before this whole area happened, we had our trend line, and our trend line would have been there. And again, normally you'll hear YouTubers and they'll be like, well, we broke out of this, we broke market structure, so now we are bullish. Well, no, we actually didn't break market structure. What we did was we are developing the market structure. We're developing the pattern. And if you're so stuck on your trend line that it has to be right and that you broke, that the market structure was broken at your trend line, you set yourself up for disaster. You set yourself up for being 1, 2, 3, 10 steps behind the market. And what we teach is being ahead of the market, being 2, 3 steps ahead of the market. So that's very important. That's why most people in the market lose so much money, because they're behind the market. So as this develops, because it didn't actually change anything. Now just take a look at what's going on here, okay? So correction, we have a spike, but correction, we have a spike, correction, nothing's changing. We're just getting, we have just some volatility here and there, right? So we're just correcting. This is all this is. It's just one big corrective move. Nothing has changed. Nothing has changed at this trend line. So because nothing has changed, we understand that it's just developing the pattern out. So what we do is we go ahead and we move this out. And we will do that until we get a clear indication of a break in the market structure. So break in the trend. So we have, if we had a bullish impulse up and that was confirmed, okay, then that would be definitely a breakout and we'd be forming new structure. But it's important to realize that, because if you're so stuck on your trend line, I see many YouTubers with tons of subscribers and they do this, and it just amazes me because you can't really be successful that way. It sets you up for disaster, and that's why, you know, I kind of harp on it. So we move that out. We move our trend line out. So this is a channel we're in. Now let me ask you the question, and you can answer in the chat. I will answer the question for you. But as I moved that trend line from where it was here out, did anything in this channel, in this structure, actually change? I'm going to pause for a moment for you to think about it. Yeah, we can look at Ethereum. I will look at Ethereum for you guys here in a minute. So the answer is no. Nothing has changed. So when the trend line was here, back here, wherever we had it before, it was a descending channel. It is still a descending channel, and within this descending channel, we are still having this corrective move. Now, there's a couple things to take note of. First of all, we should be looking for the possibility for a descending channel to break to the upside. So we should be looking for the potential to soon see Bitcoin break to the upside. But it depends on how this plays out. If we continue to see this corrective movement just do this, eventually this is going to break to the downside. It's just going to happen. If that's how we keep correcting out, it's going to happen. Even if we do not continue much further out, there is a very good chance that this will break down and we'll get another impulse down. Now, what would be most likely to happen would be to get a break, a correction, and then another breakdown. That happens quite a bit, and what would happen with that is you would have another test either of the trend line, but most likely the test would actually come from this area here, okay? So we would test that area, which is right around 6,000. If we break it, obviously we are going lower. So that's the area to look at, and I have noticed other people mentioning that, and probably for the same reason. They see it as support. So that is a possibility. We could see that pattern just drop off from here, or soon after this. You know, as the week starts out, usually the weekends are a little slower. That is a definite possibility. There's also another possibility, and it's something I want to mention, and you may not completely understand it. It's something that we delve deeply into the course. But we have this pattern here, okay? So we have this corrective flag, which dropped, and most people saw it as a small drop and then a correction. They've seen this as a bullish momentum. But I want you to notice something. So we have this pattern. We get an impulse down, and then we have this correction, which looks, it's a little sloppy. But then this correction develops into a larger correction. So this pattern here, we have a bigger pattern of it here, and then a tiny pattern which forms a bigger correction. Now again, that probably didn't make a lot of sense to you. We cover that a lot more deeper in the course. But the point is this. When you have a correction, then you have a small correction which expands, broadens out into a larger correction in that same period. It just increases the likelihood of that pattern playing out. And what the pattern is a flag to continue down. So right now, the most likely scenario is to head down to at least test 6,000, or to see some change in the structure that would indicate something different. And I will show you in a moment what that might look like, okay? And so for those of you who are looking for the bullish, I will show you that. So that's the most logical possibility. But you have to remember, it doesn't have to happen tonight or tomorrow or Tuesday. It could continue out like this for a little bit. But keep in mind, if it continues out in an upward ascending channel like this, it's just an extenuation of that flag pattern, which is still a sell. It's still looking for a sell. All right. There's another possibility, and that is for this pattern to form something bigger like this, and that would still also be a sell because it is still a flag, a bear flag to head lower. I'm just going to briefly mention, I know some people get hung up on how big a flag can be relative to the pull. In our research, in our back testing, it doesn't really matter. What matters is the pattern. If it's a flag pattern coming from impulsive movement down, even if it develops larger, it still tends to play out. In fact, larger flags tend to play out even more successfully. All right. So that covers the bearish potential, which is something we're still looking for a little bit more of. As that plays out, if this plays out here as we're expecting it to, and then we see it develop a continued descending channel, we're going to be looking for this to move to the upside eventually. So just to look at this for a moment, how this could look. So let's assume that we hit this. We get another flag. We drop lower. And wherever we hit, don't look at the chart because I'm not making predictions. I'm just trying to make a point. Wherever we hit, If from that point we form another correction, move into downside, and then get impulsive movement up, that would be an indication that we're breaking this trend and possibly moving to the upside. So that's something to look at as a possibility. Eventually that should play out. The problem is nobody actually knows where the bottom is. We can make predictions based on the past and based on analytics and understanding the market where it probably will go based on several indicators from the chart. But nobody really knows. That's why we have to put that aside, push that aside, and not be hung up on, is it going to hit 3,000 or 2,000 or 4,000? But be more focused on what the chart is saying and being involved in the movements in the chart. So it doesn't matter if it goes to 5,000 or 4,000 or 3,000 if you know what it's doing. So if you catch that movement on the downside and you realize, okay, this is breaking down and I can short this if you're able to short, then you can be involved in it. And then when it starts to correct, we pay attention to how it's correcting and see if the structure is changing. All right, so the head and shoulders, very good point. That is something that a lot of people are noticing and mentioning. I will try to address that in a moment. So Joe will remind me of that. Okay, so I told you I would give you a more bullish scenario. So we talked about there is the bearish, most likely bearish scenario that still should be playing out. This channel is not that long. I do not expect us to get a lot of bullish momentum out of this. So we do not want to see this pattern continue up. It's not a good sign. Okay, if this pattern continues up, even if we hit 7,000 in this pattern, it is a negative. It will play out as a negative. So that's important to understand. So a bullish scenario that could play out sooner rather than later. Not likely to happen, but something that you can definitely watch. Let's see. So we have this that kind of formed like this, a corrective movement. If this corrective movement were to drop off, and I'm just using a straight line, but we're looking at, a corrective movement. If it was to drop off, and then we were to move back up, and then it was to drop off, and then we'd move back up. Something like that. What is that forming? Well, first of all, it would be, depending on the size of it, but it would be a descending channel within a descending channel, which has high probability of breaking out bullish. Extremely high probability. It doesn't have to be that big though, okay? It could form, like, for instance, if this moves like this, the chances of this type of pattern, that's a flag pattern, the chances of that breaking out to the upside is much higher. That is not a scenario that I am anticipating, but it's a possibility. A more likely bullish scenario for the short term that could possibly play out is this correction to drop, test this area, or test the trend line, one of those areas, then form that corrective move, indicating that there is no longer, that's pretty sloppy, there's no longer the momentum to push further down, and then we'd be looking for the buy opportunity. Again, if this happens, then we'd be looking for that corrective move coming out of it and another bullish movement up. All right, so just trying to keep up with some of your comments here as I'm doing the looking at the chart here. So as far as the stochastic goes, I do have a lesson on indicators in the course. And I hesitate to say too much because I feel like it's important for you to understand the backdrop of why I say this, but I will say this. You don't see a lot of indicators on our charts, and there's a reason for it. Indicators are lagging. They are by nature lagging. So by the time they give you information, it is already too late. In most cases, that's not 100% true, but in most cases it is true. There are several, there are times when that's not necessarily true. So the question was, what do you think about stochastic? So let me drop it back to RSI rather than stochastic. RSI plays two roles as far as if you want to use it as an indicator, there are two ways to use it, which can be beneficial. The first way is oversold and overbought. When a commodity moves into overbought or oversold, it does give an indication of a possible trend reversal. Now, I said possible. It's not a confirmation, it's an indication of a possible trend reversal. You would use that in coordination with what we teach. So if you see a pattern that's showing for instance, a descending channel within a descending channel, or a bull flag to break to the upside, and then you see that we are oversold, well, then you might see that as, okay, we might be looking for a trend reversal, but you wouldn't look at it on its own. The second way to use RSI is divergences, and divergences do have a higher probability of working out. So, for instance, if you'd been looking at RSI divergence in December going into January, you would have seen that the bulls were losing power and that there was a possible trend reversal happening. You could have gotten out really close to the top. If not at the top, maybe around 17,000, you could have gotten out very easily, understanding RSI divergences. This isn't 100% accurate. For instance, after we dropped from, let me just go to the chart because that might help you a little bit here. So after we dropped down here and we came to this second area, RSI would not have been so accurate in telling us that we were going to continue down. So it's not like you can just set up RSI and look at divergences and say, okay, well, whenever this happens, this is foolproof. It's not going to always happen because it's relative strength and it's still a lagging indicator. So those are two ways to use RSI. You can use divergences with stochastic. I don't use stochastic. I don't find a lot of value in it. So if I use an indicator, it will be RSI. And in back testing and actual studies, RSI has been the highest performing indicator, above and beyond anything else. So you can take that as you will, but as far as indicators go, they need to come secondary. If they do not come secondary, I really hate to say this, but you will never be as successful as your potential, because they are lagging indicators. They do lack information, and they often give mixed signals, just extremely often, even RSI. So if you're basing a lot on that, you will often miss what the chart is actually saying. So focus on the chart, and then as the chart develops, you can add the RSI in, you can look for divergence and stuff, but make sure the chart is what you're focusing on, and then that's secondary. So that's kind of a long explanation, but I tend to be thorough. Okay, so the other question that we had about this chart for Bitcoin is double top, triple top, and double or triple top, or triple bottoms. So double, triple top, definitely a good point. I'm glad you brought it up, because that was something that was on my list to talk about, and I got ahead of myself. So appreciate that comment. So that is actually something that we're actively looking at. Now, there's two ways that this could happen. This is a correction, it's a flag. This flag could just continue out like this and then bounce off this triple top. If it does, that's a definite, very bearish sentiment. It's rejection at that level. It's a third touch. It would be a good indicator for continued move down. Also, something interesting to look at is the possibility of what this pattern would be developing if that happens. So I know my drawings are sloppy, but that is just a larger flag. So we're looking at a flag here, but if this continues out like this, it's just developing a larger pattern of that flag. Again, that would be a sell. So if it does correct that way, definitely be looking for the sell as the most likely. There is another possibility, and that is to get an impulsive movement out of here, which is unlikely, and then bounce from the top. If we do get an impulsive movement and we hit this area or go through it or stop below it, what is important is how it moves from that point. So what you want to be looking for is a corrective move down, a flag. I know that's a sloppy flag, and that would indicate that we would have continued movement up. If instead of that, we correct up or along that area, it's just a sell. We're looking for that to sell. Okay, so it gives you the options, and I know some people will hear this and they'll be like, well, then it can do anything. No, it can only do one of two things. It can only do one of two things. We're either impulsing or correcting. Once you understand that, you have to understand, are you impulsing or correcting upwards or downwards? Once you understand that, it's very simple. And once you understand the criteria, okay, so I just explained to you the criteria. I didn't just say, well, it could go up or it could go down. I said, well, if it does this, then we're looking at that. So understand that there's criteria. Once it's met, then we understand we get confirmation or we lose confirmation. So it's important. So that's for moving upwards. On the bottom area here, so we have this area we're looking at for a possible bounce or breakthrough, which is 6,000 area. We also have this area down here, 5,700, which is double bottom just for the short term. Obviously, back a few months we have another touch, but we're just looking at short term. So double bottom. So here's a bullish scenario for you. If we correct like this, down, that would be a bullish channel because it's a descending channel. It's a bullish movement, bullish correction. And what we'd be looking for is an impulsive movement out of that. If that happens, that would be a good signal. It doesn't mean that we found the bottom there, but it is a much higher likelihood, extremely much higher likelihood. So definitely something to look at is that possibility. If we get that kind of movement, just this continued channel, which is a descending channel, technically within a descending channel because this movement here is all just one corrective movement, then it's just doing the same thing and we're just looking for it to break to the upside, if that's what happens. So just to recap here, it doesn't matter if it bounces here or bounces here. It matters the pattern. So if we get the corrective pattern, which breaks out impulsively, yeah, then that would be a bullish scenario. Again, once that happens, we have to watch and identify what Bitcoin is developing as structure then, because at that point, it's going to develop new structure, and that will determine the future of Bitcoin. So the people out there that are saying, you know, we're going to 50,000 by the end of 2018, or 400,000, or 200,000, or $10, none of those people have a clue what they're talking about. Absolutely no clue. What they're doing is they're guessing, and it might be a highly educated guess, but it's a guess. So you don't want to listen to that hype. You don't want to listen to that nonsense. It doesn't do anything for you. All you care about as a trader is understanding what pattern we're in, what the structure is, and what the next step should be. So if we're in a corrective move down, what's the next step? For those of you who are taking the course, you know this. You're already on this, and we've heard from a number of you that you're catching on and it's really making sense, and that's exciting to me to hear that. A descending channel, a descending corrective movement, we're looking for the potential move to the upside. This is what we're looking at. So again, there's a couple things to consider here. We went over a lot of different scenarios. Hopefully I didn't confuse you by going over too much, but I want to give you both scenarios, bullish and bearish and everything else. So let me see if there's any questions here on the chart for Bitcoin still. All right, so if there's no other comments, questions about Bitcoin, if everything was clear, then that's awesome. I'm doing my job. I do apologize for the chart being a little cluttered. I do usually clean up my charts a little better. But yeah, so it does look a lot nicer. I like them to look perfect, but it doesn't really matter because it means the same thing. So Okay, so we had a question about high risk versus reward. I know there's quite a few, well, I know a couple channels right now are talking about it's too risky to trade right now. It depends on your level of experience and your understanding of the market. If you understand what is happening and you're waiting and you're understanding what the next step should be and you understand how to get into that, it's not really that high of risk. If you're new to this and it's completely new, you do not fully understand what I just told you as far as the structure we're in, then it would be a good opportunity for you to observe. You can do some paper trading. I'm actually going to move this because this is annoying me. That should be out there. It should not be there. So that was annoying me. Anyways, yeah, so if this is new to you, do some paper trading. Just follow our videos, follow our live streams, and just learn, okay? Don't risk when you don't understand. Learn to understand, then risk. So is it high risk? Not necessarily at this time if you're waiting for the confirmation. There's no trade right now to make, okay? So if that's what you're looking for an answer on, no, there's no trade to make right now. We don't have a confirmation. We're just developing our structure. That could change tonight. It could change tomorrow. It could change over this week. So you have to be watching that. So hopefully that answers your question a little bit. Risk reward, it depends on your level of experience and your understanding of the market. So there was a comment on Tether. I know Tether is easy because there's a lot of exchanges that offer it that don't offer USD. I will caution you against putting your money into Tether. Be very careful. It's hung around for quite a while here, but there are serious issues with Tether as far as whether it's actually backed. Even if it is actually backed, the US could still shut it down or greatly hinder it. The US could sue Tether, could sue Bitfinex, which owns Tether, or Tether. They're owned by the same entity. So be careful. That's my only concern. What you do with your money is your issue. But if I have something that I feel is important, I feel like I have to share it. So if at the end of the day you hear that and you feel comfortable, that's fine. That's absolutely fine. I don't have a problem with that. Just want you to have the opportunity to understand what we're seeing. I do believe at some point Tether is going down. So be careful with that. If you have the ability to put it into actual USD, do that. It's going to be much safer. If you're trading on GDX, you can put it in USD. So I won't belabor that point. It is your choice. I just wanted to share that. That's interesting. I didn't know that Binance was considering Euro pairs. That is interesting. I do have concerns about Binance as well. I do hope that they up their game and cooperate. They've been defying regulation, which in the past can get you hurt. All right, so we had a question. Do you set up trades while the structure is still forming or wait for the second or third touch? It depends. Normally speaking, structure will take... Let me back up here for a minute. So this channel that we're in here, okay, this is a channel. Obviously, this developed over a period of... We're looking at right around a month, okay? Well, 2 months. Sorry, 2 months. I'm still in June. So we got about 2 months for this to develop. There is movement in this pattern that we could have traded off from. If we break this down to the day, to the hourly, let me do that here, and all right, it'd just be easier if we look at the hourly. So you obviously have impulsive movement here on the hourly chart, okay? And then it corrects, a little bit more impulsive, then this is just a bigger correction. Another impulsive movement, you have impulsive movement here throughout here. So there's opportunity in this chart to trade. Again, it goes back to your level of experience and understanding the chart. Some of these impulsive moves, you're just not going to catch. It's just not going to happen, and that's okay. It's going to happen. You know, you're going to be looking for a flag to develop, and on the second hour, it's just going to go without. You know, it's just going to go. So as you develop your abilities and you develop your experience, you might be drawing out, you know, your structure, and you'll be like, okay, an ascending channel, it's a flag pattern, you know, coming out of an impulsive movement here. This is going to most likely break, and you might want to, if you have the ability, set a short for when that breaks. You can do that. Just make sure you have your stop losses set up, so if it impulses down, then it retraces that whole impulse, which does happen. You get stopped out at a small loss rather than going wild, you know, and losing $1,000. So you can do that. I will do that sometimes. You know, you just have to be on your A game, and you have to understand what the structure is doing. So understand we're in a descending channel here. At this point, we only have one touch on the top. However, if you were looking at it like this, at that point, when you only had that much data, you can say that's 2 touches. You're looking for a 3rd touch. So as this came out, let me zoom in here, because I think this is actually a very good point. You gotta be careful here. So that would be your 2nd touch you'd be looking at, and then you'd be looking here at 3rd touch, and you'd be like, well, it's impulsing. And it does look like it's impulsing, right? But it immediately goes into correction. So it isn't an actual impulse. It just appears to be impulsing. It's a tiny impulsive move within a correction. So you could get caught up in that. So with experience, as you go over these charts, these things become clearer and clearer, and you understand the points to place trades and to set up your trades. And there's another point too that just came to me as I'm talking about this. It's okay. You know, there might be a trade with 20% in it. If you're new to trading, it's okay to only get 15% or 10% or 5% or 3% of that trade. Any trade where you're making money is a good trade. Okay? As long as you understand the risk and you understand the pattern. So if you're waiting for a full confirmation, you're not going to get the full amount of the trade that's possible, but you're also not risking as much. So there is, you know, it can go both ways, and you have to develop your skill. It comes with skill, but, you know, I also don't want you guys to get hung up on feeling like, well, this is, you know, this is going to take me years to figure out. If you're dedicated, you're willing to learn, and you're willing to set your biases aside, it doesn't take as long as you think. There's people that just started the course, and they've only been doing a week, and they finished the course. Some people have finished the course already, and they're already sending us charts saying, this is what I'm seeing. I placed this trade, and one guy wrote us and said he's already paid for the course, which isn't a ton of money, but honestly, $400 from a new trader, that's something to clap about. That's something to get excited about. You know, that's nothing to sniff at. Okay, so there was a question about paper trading. Basically, what you would do is you would click Trading Panel, and then you'd select Paper Trading. That's actually how simple it is. I usually trade with Awanda, and we have Awanda and Forex.com brokers, and I'm drawing blank there, but those are the best that we have in the US. If you're outside the US, you might have actually better options. You know, some places in the UK and Europe actually have much more variety to trade. So that is an option. So yeah, it's just, you would just click that. It shows Awanda because that's what I usually am trading with. I have it off right now because I just didn't want all the alerts to be popping up while I was doing the live stream. And if something happens while I'm doing the live stream, it will come up on my phone and I will disappear for a moment to check that and make a trade. But I don't anticipate anything going quite that fast. So, alrighty. So we kind of been talking, we kind of covered Bitcoin pretty good. I hope I answered the last question I was addressing pretty well. All right, so thanks for the comments, the kind comments. We do appreciate that. We appreciate the feedback. The feedback since we did the live stream and released the course last week has been phenomenal. I guess the reason why it really excites us so much is because we understand the pain and the agony of losing money, of trying to figure out how to trade, and you think you got it. You think you figured it out, and then you lose it big. And just the frustration of feeling like, I gotta figure this out. I gotta make this work because I've lost money in this game. And to hear you guys, you know, give your feedback and say, you know, it's finally starting to click with me. It's just, I guess it brings back memories to when the frustration we had, and as we learned this method, you know, it just made a difference, and so much, you know, it's been exciting. So there's a question, at what point did we realize Bitcoin was going into a correction after December 2017? Well, let me just quickly go there. We'll just go back to the daily here. It's a good question, and it's related to Bitcoin, so we'll discuss that now. All right, so as we are coming up to, let me actually zoom into, we don't need all the recent data, this is better. So as we're coming up to the top here, it's very impulsive, extremely impulsive. And there are little spots here where we get an indication. Like this is a good one right here. Right there, that's a bull flag, okay? So November, we have a bull flag. That would have been a great point to get in if you weren't in already, right around the 6,000 area. That's the last real bull flag that we have. After that, once we get to this point, we see something very interesting. Okay, so let me just zoom in a little bit more here. So we're at the top. So we see these spikes, and they are big candles with big wicks on both ends, but mostly on the bottom end. So on the bearish end, which show extreme volatility. So when you have, when you have a very impulsive move up, which has been just propelling, and there hasn't been really anything stopping it, and then suddenly you see these large candles with huge moves. I mean, we're talking several $1,000s, up to $5,000, $6,000, $8,000 in movement, and smaller bodies, large wicks. It's telling you extreme volatility is coming into the market, and when you've seen that, it indicates that you should either expect a large, a quick change in direction, a large impulse down, or a corrective move to form a downward movement. So we saw these movements, and then it started picking back up, and you would, as we go into December towards the middle of December, the news is going crazy. They're bringing in analysts who are saying it's going to 200,000, it's going to, you know, 100,000, it's going to $1 million, and I'm looking at the chart and I'm saying this is extremely volatile. We've had a huge run up. We have warning signs here. I mentioned earlier there was the bearish divergences, which were telling us that we're losing momentum. Again, it's volatility. But even as we start to move down, you still had opportunity to realize this trend is shifting, it's changing. So in December, I would say, was the warning signs. The problem was, what happened is, as we dropped here, and then we started to get this movement up, we went down, you know, to 10,000, and then we went back up to 17,000, and what people saw Because they were blinded by, some were blinded by greed, other people just, they just wanted to believe in it. Regardless, what they saw was a retracement and a move back up to 17,000, and all they could think is, we're just going to make a new all-time high. And we had so many people buying at that point, and then that's when it kind of dropped off at that point. So the question is, when, were the warning signs? When would you have been able to see that? And the truth is, you could have really told the early part of December. You should have been catching on. As we run into this 8th and 9th, you should have, alarm bells should have been going off. It doesn't mean you had to get out, although, it could have dropped lower at that point. You should have definitely been out at December 16th, and the reason is, actually probably December 14th or 15th, and the reason is because you had the divergence. It was telling you that the momentum was dropping off significantly. Also, if you'd been watching the chart during this time, it was amazing. Like, these moves down here, the amount of volatility was so great that you would see the price move thousands of dollars in literally seconds. I mean, within minutes. It was just, within minutes, it was changing thousands of dollars. And when you see that, you know that it's, you should be getting out. If that's a top, you should be getting out. So, yeah, I would say the middle of December. I would say the middle of December to answer the question. And then running into January, definitely. Nobody who understands technical analysis should have been in Bitcoin coming out of December. You shouldn't have. And if you did, yeah, you could have gotten out on, January 6th. But that was not guaranteed. That top was not guaranteed. And the people who did stay in didn't get out at that point because they thought it was going higher. So you do have to be careful to check your greed, that you're willing to take profits. If you bought in 6,000, 5,000, 4,000, even 8,000, and you were not willing to sell at 17 or 20, that's kind of greedy. Be willing to take some profits. It's not a bad thing. And if you have indications that the market is changing, you should be willing to take that. All right. I want to move on. Somebody asked about Ethereum, so let's look at Ethereum. I think I have that set up. I do. Good. Sometimes my charts don't get saved. So Ethereum is actually kind of interesting because Ethereum obviously follows Bitcoin. So all the altcoins are going to follow Bitcoin to a degree. However, if Bitcoin isn't making impulsive movements, Ethereum does forge its own way. And honestly, these movements right here in this channel are really sweet. I mean, really, really nice. It's really clear. And here's the thing to look at. So setting this up, we'll do this quickly here. So we have a descending channel, same thing as Bitcoin. Within the descending channel, we have a really nice descending channel. It's a descending wedge. It's a closing wedge, but it's a descending wedge. So here's the thing to look at. What we can do, all right, let me do this here. So we could draw a trend line out like this. It's not necessary, but for some of you it will help because you're used to having trend lines on both sides. I'll give you that for now, but actually I'm going to take that. Just rein it in there for a moment. So you have a descending channel within a descending channel. Now, again, I'm going to ask the question because I want to drive this home. What do we look for a descending channel to eventually do? What's the eventual prospect of the descending channel? All right, exactly. It's a buy opportunity. Now, you have to be careful because you have to understand the confirmation for the buy signal, because a descending channel can continue quite a long time. For instance, like Bitcoin, this channel has been developing for what? Around 2 months. And if you had traded, you could have seen this impulsive movement, jumped on it thinking, okay, it's dropping, and you could have made some money on that, right? But it's just part of this descending channel. So it didn't change the structure. We didn't break out impulsively. We just are developing the structure. So now we have 2 touches on the bottom for this ascending channel. We have basically, you could say 3. We're touching it here now. So we should be looking for one of 2 possibilities, actually 3, but the third one goes along with the second. The first one is this could just break impulsively from here. There's nothing stopping it. It's developed beautifully. We're breaking out of a descending channel within a descending channel that has 3 touches on the bottom. It's a perfect time to break. It could happen. Again, it's connected to Bitcoin, so Ethereum's not going to break out bullish and Bitcoin break out bearish. They're not going to separate like that, at least not soon. Someday, that could happen. It's not going to happen right now. So keep that in mind. If Bitcoin continues to correct, for instance, if Bitcoin's correcting like this, in that area, or even a smaller area, we could do, smaller area, Ethereum could break out bullish still. It could definitely happen. That's a possibility. These don't want to disappear on me. Okay, there, we got rid of them. The other possibility is another corrective movement to the bottom. It could impulse or it could correct. Either way, doesn't matter. Of our descending channel. And from that point, it doesn't even have to hit the bottom. But we're looking for a possibility to move lower. And then it could break out. Now, something to look for. If you see this pattern just unfold like this, that would be beautiful. That would be absolutely beautiful. And we'd definitely be looking for that to be a buy. Okay? Again, gotta correlate it to Bitcoin. Keep it. Watch Bitcoin, what Bitcoin's doing. But if Bitcoin's just hanging, not doing much, we might get impulsive movement from Ethereum, and you could make some money. If you can make $50, $100 on the move, take it. Go for it. So it can do that, or what could happen is we could impulse down. We could form a corrective move upwards, impulse down again to test this area, which would be, that'd be a low move. If that happens, most likely Bitcoin's dropping, okay? And that'd be the reason for it. And then we'd be looking for it to come back up and be a buy at some point. That's possible. The other possibility is an impulsive movement down, a corrective move up like this. Doesn't matter how long it is. Just a corrective move to the upside. And then we'd be looking for that to be a buy. So that's some possibilities with Ethereum. Ethereum's looking really nice. If Bitcoin doesn't drop bearish right away, I would be very surprised if Ethereum doesn't break out here within the next couple days. I would be quite surprised. There is, however, something that needs to be noted, because I don't want you to misunderstand me or misquote me. So we are looking for an impulsive movement, okay? That's what we talk about in our course. We talk about what phase we're in, so understanding what phase we're in. What could happen is we could break out of our 2 descending channels, but not actually change the structure. We talked about this with Bitcoin. This is what already happened with Bitcoin. We're seeing if it will happen with Ethereum too. So we have this movement. We could have it continue out something like this. Again, doesn't really matter if it's those big of swings. What matters is, what are we forming? It's not the prettiest, but it is a flag pattern to move to the downside. All right, so it's an ascending channel coming out of a descending channel, or just forming a bigger structure within that descending channel. What we would then do is, if it's corrective, it's not impulsive. If I can get a hold of this here, we would just move that out, okay, to wherever it ends up, because we know that that's just developing a bigger channel. Here's the issue. If that happens, the same as with Bitcoin, it means Ethereum would be going much lower. Again, they are correlated, but if this structure just builds out into a bigger descending channel, we're just going to be looking for more continued movement down before the descending channel actually breaks to the upside. These are things that are important to understand, rather than just thinking, well, it's descending channel, it needs to break out, and just not understanding when. All right, so a couple people asked about Zcash, and so I'm gonna just add that to the cart. It's the chart. We'll look at that for you. I'll be honest with you, it's not a coin that I have looked at, so I don't have anything on it, but I will add that. Anyone interested in looking at Ripple? Is that something that you're interested? Again, doesn't matter what coin you're looking at. You have to understand the correlation with Bitcoin. But again, if Bitcoin's not making those impulsive movements, you're going to be able to trade the altcoins, and they'll play out really nice. Like Ethereum is just beautiful, just absolutely beautiful. All right. So let me just draw some things out here. Obviously, there is you're going to see the similarity to Ethereum and Bitcoin, but you will notice that even though it follows a similar pattern of as far as it's a descending channel again, you'll notice that the moves are very different. Let's go back to Ethereum here. Look at the moves on that. Look at the moves on Bitcoin. Now look at the moves on Zcash. So this is why it's important. There's still money to be made in bear markets. You know, it doesn't matter. You just need to understand what it's doing. So I know I'm gonna harp on that point. Every chance I get, because the reason is that I think there's too many people out there that do not know how to make money in a bear market. So they're always looking for the bull market, and they're actually blinded to the bearish sentiment. And that's dangerous, because you need to be willing to see both sides, because the chart doesn't care what you think. The market doesn't care what you think. Okay, so this is interesting pattern, because we're kind of moving in the middle. We're not actually, you could technically say we have 3 touches on the bottom. It's close. It could play out that way. What we're developing here, okay, so I'm going to actually ask you guys what you think. What do you think this last pattern here in the descending channel is? Do you think it's similar to what we're doing with Ethereum? And the reason why I ask questions like this is because if you have to think about it, it makes you a better trader. So even if you're wrong, it's okay. We're not going to put your name on a list and say, well, that person, he was wrong. And honestly, many of you guys here, especially those that are taking the course, it's kind of embarrassing to say, but you're leaps and heads ahead of where we were when we started. Even after we started, So you have a benefit there. It's going to make a big move. Downside sometime, but it can always be a reversal. It's consolidating, getting ready to break out. Okay. Good points, good observations. None of those are actually wrong. It would be timing. It would be timing and confirmation. So any of those can play out. So let's just look at, we have, and we're going to ignore, I'm just going to ignore these 2 wicks for now, just because it's going to be easier to see the pattern. But if you cut those off, and the reason why I'm going to actually do that here, and I did draw the trend line to it, but this is a very volatile candle. So it doesn't necessarily always give us the best understanding of the market. So if you have an extremely volatile candle, where you have very small candles, very small movement, and then an extremely large wick, sometimes cutting through that can be the best for understanding where the pattern you're in. You should not get in the habit of doing that any other time. For instance, you wouldn't do something like this. That would be wrong, okay? Because these wicks all are important. They're just part of the chart. But if you have a huge volatility, sometimes, it can be something to look at. So we have kind of a just a sideways movement. It's a continuation pattern. So we have to look at what the preceding movement is, because that's going to tell us what phase we're in, okay? So we have a clear impulsive movement down, right? That's sort of a corrective pattern. If we break it down to the hourly, we will see that. Then we have a flag pattern, okay, bear flag, another smaller impulsive movement, and then this is you could say it's a wedge, a triangle, a flag pattern, but you'll notice that it's not a clear bull flag, okay? It's a corrective movement, but it's not a clear bull flag, which indicates that it's probably not going to, it indicates the possibility that this could be reversing or just developing larger structure. So that's important to understand. When you have clear patterns like this and then they aren't so clear. Now, you can draw it out more like this. Then you'd have, it would be more of a bull flag pattern. But the same thing is still true, that it appears that we're developing a larger structure. So let's remove this. Now, what if we were to do something, I know we ignored that before, but we'll just do that for now to just humor me. What if we get a movement like this, and it does something like this? We're looking at the possibility that's going to sell. There is still going to be impulsive movement within that in the hourly on the lower time frames to possibly trade. But if that happens, then again, as we mentioned before, we're just looking to broaden out. So obviously we need some wicks to put that on. You know, we would, but it would be just a descending broadening wedge. So that's a possibility. We mentioned that as a possibility for Bitcoin. The other possibility is for this to just correct downwards and then get the impulsive movement from there. It also could just break from here. It could just move sideways in a corrective pattern, or move down the trend line in a corrective pattern, or sloppily. It doesn't have to be perfect, and then we get a break, a buy signal. So here's the thing. If you see Ethereum setting up, and you see Bitcoin setting up for a buy, or Bitcoin goes impulsively, then you should really be looking at these other altcoins, Zcash and Ripple and Ethereum. They're in descending channels, they're probably going to break out. They're going to break out with Bitcoin. So if they haven't already, you should be on your toes, just watching them, getting ready to put those buys in, because it's going to give you opportunity and you might have time. But they might break out before Bitcoin, or they might break out without Bitcoin. So keep that in mind. All right, that kind of covers that. It's honestly, I really think that probably we're going to see a little bit more of a continuation down, at least shortly for Zcash. How it seems most likely, but it doesn't have to. Let's quickly look at Ripple. Then I want to touch on a few Forex pairs, because there's people asking about that. We don't want to disappoint you guys. And then we're going to do a little bit of Q&A before we just call it here. So we were talking about these long wicks. This is a perfect example, okay? This wick right here is a perfect example of huge volatility. Now, this type of wick happens when there's like news that comes out. For instance, GDX says they're going to possibly list a coin. You'll see a wick like that. Probably a bullish wick, but you get the picture that it'll wick like that because it becomes very volatile. A lot of people buying or a lot of people selling. When you have that, you would ignore it, because what happens after? It just continues the pattern. All right? It completely ignores it. Absolutely, there's no value in that wick. So we ignore it. Doesn't add value to the chart. So people ask, well, doesn't the news affect charts? Yeah, a little bit. Depending on the news, if it's huge news, yeah, a lot. It can. If someone dropped a bomb on Canada, yeah, USD CAD's going to go through the roof, because the US dollar over Canadian dollar is going to go crazy. It's going to go crazy bullish because someone dropped a bomb on Canada. But that doesn't happen every day. So often what happens, you get news, a spike, and then it just continues what it was doing. That's usually what happens. So, all right, so Ripple. We're starting to see a picture here. Descending channel within a descending channel. But you'll notice that they form a little bit differently, okay? So Ripple, it's a descending channel hugging the top. We have 3 touches. We're looking at a possible break here soon. We could see this correct down, hit this area, and then bounce. It could correct outside the trend here, the trend line, and then buy. But we are looking for that buy signal unless, again, Bitcoin impulse is bearish again. Then it would invalidate it. Okay, we're going to jump into some Forex pairs. For those of you who aren't into Forex, I encourage you just to play along and watch. If you're not at all interested in that, it will still give you an opportunity to understand charting. So, you know, whether you're going to trade Forex or not, it's still a good opportunity to learn. Forex is an awesome playing field for one reason, simply because there's so much data and a lot of the charts have developed and matured so well, they work really well. So the patterns we teach work really well. I love cryptocurrency. I love trading cryptocurrency, Bitcoin. So it works for me on both ends. All right, so this ascending channel that we have in Forex, not Forex, it's Forex, but the Euro-Aussie pair. It's an ascending channel, which is a sell, right? Okay. So this is something that we had talked about previously. We anticipated this as a sell, and some of us have gotten in on this sell and made some profit. Here's the thing. There's actually quite a bit of potential left in this pair. So it's something to keep an eye on and watch, and we're going to just talk about the things to look at here now. So we have broken out of this ascending channel. The question is, how did we break out of it? Is this break out of this channel? Is this a confirmed break, breaking market structure, breaking our channel, or has it been invalidated? I'll give you guys a moment to answer because this is a perfect pair to understand this on. It's just absolutely perfect. All right, so the answer to the question, I will answer it for you. The answer is it broke impulsively. So it broke impulsively. So this trend line was valid. It did break. It was a valid, validated continuation drop. Very good, guys. Great, you guys are learning. That's awesome. That is absolutely awesome. It's exciting. It's really exciting. So, okay, definitely. Totally validated. Impulsive movement. This was awesome too because you could have caught this impulsive move and understood that there is the possibility it could bounce again. But we're 3 touches. It's extremely high likelihood at this point of breaking. You could have caught it in here, or you could have traded it off here. You know, it's a little riskier up there. Set your stop losses, and you could have had it. That was a big move. That was a nice movement. All right. The question that you probably are thinking though is we just retraced that whole, almost that whole amount. This is an important lesson right here. A lot of traders, and I'm not going to mention names because some of you I know actually listen to these guys. But if you're listening to what I'm saying and it's resonating with something you've heard, be careful who you listen to. People will trade a move like this. They'll catch it. How they catch it, you know, that doesn't matter at this point. But they'll catch it. They'll see it correct, and they'll be like, all right, I'm in profit. Let's say we're in, $400 profit, okay? And they're like, you know, I'm in profit. This impulse down, it's ascending channel. There's more movement in this, okay? This has a possibility coming down here, which is absolutely 100% true. Let me just put that on there. It's 100% true. It does have the possibility coming, hitting this down here. That's a huge move. So they'll be like, it's correcting. It's going to continue down. All right? So I'm going to stay in. So it corrects up. Corrects up. It corrects up. Corrects up. Even if you get out with profit, you've lost. You've given back to the market a considerable amount of your profit. Why would you do that? Why would you do that? So there's a couple things you can learn from this. First of all, a large impulsive movement can have two forms of corrections. You can have a small correction. So you see this movement here and it drops off. That could have been the correction. So staying in for that correction is fine. So it corrects, drops off again, and then you have this candle. It's not an engulfing candle, but it is almost an engulfing candle. So it almost retraces this whole bearish candle. Let me zoom in so you guys can definitely see that better. So it almost retraces that whole candle. It's an indication that this correction is possibly going to correct much larger before continuing down. You have another candle that retests this area, third test candle. It retraces all the way back up almost, and then you have an engulfing candle. You should not be in past this candle. You should be out of the trade, at least by here. You should have been out in this area. You should have caught the second test and been out. And then if it continued to impulse, you could get back in. But by this very engulfing candle, you should be realizing that there's the potential for this to develop into a larger pattern before continuing down. So impulsive movement, correction. This is not impulsive, it's corrective. So what are we still looking for? Let's drop down to the 4 hour for a moment. You'll notice I have some weird scribbles. Let's drop down to 1 hour. I was getting ready for the live stream and I just doodled rather than use lines because it was quicker. So pardon that. All right, so this is this corrective period. There's impulsive movements within it. Again, you can trade them. You have to be careful. They are more volatile. But, you know, as your experience is, if you see it bouncing off here, this could be the one that goes. You don't know that it isn't. So it's a valid entry. It's just, it's more risk than where we are now because the pattern's developed more. But that is a valid entry. And here's the thing is if you got in here with a very tight stop loss, you would have had profit. It might not have been huge profit, but you'd have profit. And then it starts to correct up, you get out. So these aren't the type of moves I would recommend you getting involved in if you're new. But as you develop your abilities as a trader, those are definitely moves you can play. It depends on your personality, what kind of trader you want to be. Some people just want to trade, you know, a few times a month, get the big trades, the clear signals. Other people just want to be trading all the time. You know, so depends on your style. So there's a couple possibilities. I do have them mapped on the chart for you, so it's a little easier, but I will go over them. We may see an impulsive movement up out of this and then drop. And the reason is, let me just draw this out so it makes a little bit more sense. If we see that impulsive movement, really what has happened is we just developed an ascending channel within an ascending channel. That's all it is. Pretty much that's what we're in right now, but it's more of a continuation, a sideways movement. But that could be developing into a larger pattern. So we have to be understanding that that's a possibility, that it's just developing a larger pattern. It doesn't have to, though. So let's get rid of that. That's a possibility. It might happen. The other possibility is that this could correct up like this along the trend line. That is a bear flag from an impulse down, which would be a sell. That would be a perfect sell. You can get in on that on the third touch. The problem is this could develop fairly quickly, so be on your guard. It could drop from here. All right, so if we zoom in here so you can actually see this, you will notice that we're seeing some movement on the trend line. It's not a confirmed movement right now, but it could impulse out. It could definitely impulse out. So watch that. Here's the thing, though. As this is developing, it could be developing this. What is that pattern? That's a flag pattern to move to the upside. Now, we know that this is eventually going to break down. So we're not looking for a large buy at this time, but there might be a short-term buy. We might hit this area here, which is double, triple, quadruple top. So there is a possibility for a small buy opportunity. That is a possibility. It's also a possibility, again, it might impulse right from here. And if it does, we need to be ready to get on that, because if it impulses, we could be looking at, hold on here. Okay. Got the right tool. That's, let me get my stop loss correct here. All right. So that's a really, really nice trade. You can, that's a beautiful trade. And the thing is, it's probably going to correct at some point here and then continue down. So be careful. Be watching for the possibility of a short correction or a large correction, and be ready to get out and then get back in. So watch this pair. It's going to develop soon. We should be seeing this either impulse down soon or just kind of move along this edge. If it does, that's going to be a sell. Or as we mentioned before, move upward, form that larger pattern to the sell. The end result is we're looking for a sell. Even if it's a short-term buy, it's going to be, this week we should be seeing a sell for that. All right, so Euro USD, go over this quickly. Go down to the daily for you. All right. So we're developing this pattern here. So we got a impulse out, a tiny correction. So the next correction we're looking at a larger correction. So a larger pattern of this. So we're still expecting this to sell. We're just waiting for it to develop. It still looks like it has some movement left. Most likely what's going to happen is this is going to correct down further and test. If it corrects like this, then we are probably going to see this move to the upside before selling. And that's probably the most likely scenario, because that's what we're developing. We could change direction here and just kind of do this. If we do, that's just forming a larger pattern of this area, and that is a bear flag to sell. So ascending channel within a bear flag ascending channel, so sell. That's what we're looking at as a possibility. Also, it could correct down, correct back up. Again, it would be a sell. It could correct down and then impulse up and then be a sell, but it's still, it would not invalidate the structure unless it impulsed up and then we corrected down and then moved back up. So possibility, it's not likely to see that kind of a buy at this point on this. We are looking at the possibility for this to, we have point there and down below. There's some movement definitely that can be seen in this area. So that's Euro USD. All right, so there's a question about, I was talking about getting in on a trade when it falls. This is foreign to a lot of people in cryptocurrency because most people in cryptocurrency are familiar with what's commonly referred to as hodling or buying and selling. So people are familiar with the idea of buying and holding a cryptocurrency and then reselling it. But in Forex, people don't buy Canadian money and hold it and then resell it. What they do is they short or long a market. What basically means is, for instance, let me zoom in on the. If I can get my cursor here, let me zoom in on the chart. So let's say that I think once. So let's say that this corrects like this. Okay, it corrects up like that, and it does a double top, and I say, well, you know what? I really think it's going to impulse from here. So we start to see a movement down. I buy right there. So, okay, I buy, not messing my own words up here. I short right there. What it basically means is I'm taking a position using somebody else's money. So I'm placing a trade, and I'm saying that the market's going to short, you know, euro, we're on euro USD. So I'm saying that I think euro is going to lose money over the USD, the euro. If it does, then I gain money all the way down. As far as it goes down, I'm gaining money based on pips, which is profit in percentage. So it's based on the amount of money that I have leveraged. So if I have $100, I put up $100, exchange like a Wanda is going to put up 50 to 1 on that. So they're putting up a considerable amount of money to make that trade larger. So it just makes the opportunity much bigger to make a profit. So it continues down. I get out. I'm in profit. However, if it turns around on me and goes up, if I stay in that trade, I'm responsible. And eventually I'm going to get a margin call on my account if my account's not large enough to take the trade. And if I don't heed the margin call, my account, the trade will be closed, and I will lose money on that trade if I don't have enough money to hold the trade open. So I'm basically, I guess you could call it kind of like betting. You're betting that the market's going to go down. The benefit of shorting or leveraging margin trading, there's several benefits. First of all, you do have leverage. So you put up $1, and for instance, a broker like Wanda is going to put up $50. So a trade for $10 becomes $500. So it offers you, that can be a negative if you're in losing. So don't go crazy and get in 500 leverage or something. The other benefit to margin trading is you're not hung up on trying to hold something. So for instance, when I'm trading Forex, I don't care if it's going up or down. It doesn't bother me one way or another. All I care about is if it's going down, I'm in. If it's going up, I'm in. And if I know what it's doing, I can get in. And so I'm putting up money. I close the trade when I feel like it's changing direction or correcting. I cash out, I got my money, and I don't have to hold a currency. So there's the benefit there. You can margin trade cryptocurrency. It's not regulated, so you have to be careful. And, you know, but eventually I do think regulation will come in to protect people from exchanges and brokers in cryptocurrency taking advantage of them. So hopefully that answers your question. All right, so question, we're going to transition to Q&A here for a few moments. Was it 10?
Yes.
All right. 10. We're going to transition to Q&A, and then we're going to close this out very shortly because I know some of you are on the road. We had one of you wrote us and said that you're actually on the road and you stopped at a cafe just to listen to the live stream. So kudos to you. So I want to close this out shortly, but we do want to cover your questions. So if you have questions, you can go ahead and drop them in the comments now. We'll try to get to as many as we can. Someone asked about ETFs. What do we think about the ETF for Bitcoin? Will it be approved or not? It's hard to say. I do think eventually it will be. Whether it's going to be approved on the date in August that's being set remains to be seen. There's some indication that it could go either way. If it does get approved, there's a good chance we could see a, I don't want to say bullish movement because that gives you the wrong impression. You could see the price of Bitcoin and other cryptocurrencies rise. But if they're rising in a corrective manner, or even in a volatile, short-term volatile spike that then corrects, it doesn't invalidate the structure we're in. But you can still get in on it. For instance, if you hear news that the ETF is being accepted and you start to see Bitcoin impulse up, buy it. Buy it and be ready to sell if it retraces, because it could retrace really quickly depending on the news. But that would definitely be the opportunity, and you might, who knows how it could affect the market. You might be able to make $1,000 on that trade. So be ready to get in on it, but don't get so encompassed with it that if it impulses up, you're getting in on the impulse up as it's retracing the whole amount. So be careful. But I do think it would be a good thing overall, probably. Any leading indicators that we feel have value? I mentioned this in the beginning of the live stream. The main indicator that I would actually give value to is based on back testing and actual studies, is relative strength index. It does actually have value, and in actual back testing, it does outperform all other indicators, as opposed to moving averages, which consistently underperform everything else, including random trading in many cases. So moving averages, here's the thing with moving averages can play out in trends. The problem is they will not always play out, and they can give false signals, and if the trend is changing, it's not going to be able to tell you that. So it places you in a situation to be handicapped and blindsided. So I will never use moving averages on my chart. We have in a couple videos on YouTube to show you, for instance, what other people are talking about. But as far as trading, I never trade with them. I think it's dangerous. Moving averages are very dangerous. So the CBOE futures expire. Will that indicate a drop? Honestly, it really doesn't matter. It has in the past influenced the market as far as a drop, but again, going back to Bitcoin here, the pattern we're in is not going to be invalidated unless we get a clear change of direction. So even if the futures expiring does fluctuate the price, which is possible, it does happen, okay, the market is most likely just going to correct back to where it was going to be normally. If it doesn't, it's just going to form a larger pattern of what it was doing, okay? So, for instance, on the daily here, let's assume, let me just use the marker here. So let's assume that the futures expire, and let's say we get a drop down to 6,000. Let's just say that happens. But then we just have this corrective movement like this up. Did anything really change? No. It just developed a bigger pattern of what we're in. So these things can influence the market, and you need to be understanding that, okay, there's the possibility it could drop, and if I'm able, I'm going to get in on a trade if there's a trade that opens up. But also understand the two possibilities that, first of all, you could have something that impulses down and retraces the whole amount. That does happen. The other possibility is that you could drop, get in on a trade, and then it just is correcting upward to continue what it was doing. Or, So, is it important? It's interesting to keep a note of. I wouldn't place so much emphasis on it that it changed my opinion of the chart. As far as GDX or Coinbase adding more coins, I do think they will. It only makes sense that they will add more coins because it will expose them to more traders. They do have a large user base. I think it will increase the utilization of that platform. So yeah, I do believe that over time they will be adding new pairs. Whether they're going to add the pairs they have indicated remains to be seen. I do think that it is something to be wary. Again, I mentioned impulsive movements that are retraced. That's exactly what's happened with that news. You had huge impulsive movements on these coins, and now you have to watch, are they just being retraced? Are those movements just being retraced? So just be careful that you're not getting in after the news. So the news comes out, and you get a huge impulsive movement, you buy in, you're at the top of that impulse. So be careful about that. You know, if you're going to get in, make sure you're getting in a good spot. Andrew asks about bot trading, manipulation in the market. This is a very good question. It's something we've talked about in the past, and it's something a lot of people refuse to talk about, and some people don't want to hear. Here's the thing. If something bad is happening, does it help to ignore it? Or does it set you up for failure? So saying that there is manipulation in the market, where there is, I actually have recordings of wash trading. So it does happen. It's still happening. Does it affect the market? Yes. Can we still understand the market moves? Yes. Just understand that right now, cryptocurrency market is a lot like the Wild West. There's not a lot of law and order. And when a sheriff comes on the scene and says, I want all your trading data, some of the exchanges are like, screw you. We don't have to follow you. We don't care what you think. And that's kind of been the attitude of a lot of exchanges. Now the CFTC is coming on the scene and saying, listen, we want all that data. And if there's manipulation, we're probing, we're looking into this. And if there is, now they're even offering multi-million-dollar bounties for people to give information. So they're serious about this. So yes, it is happening. Yes, it does affect the market. Yes, it can negatively impact where we're at. But in the long run, cryptocurrency is going to develop into a mature market just like Forex. And I believe there's a huge possibility of brokers like Forex.com, Awanda, FXCM, picking up cryptocurrency pairs once regulation comes into the market. If that happens, volatility will go down significantly. And these patterns that we're talking about are going to play out much, much more beautifully into such a perfection that cryptocurrency is going to become a huge, huge moneymaker just because the moves in cryptocurrency are so huge. So bad news is, yes, there's manipulation, wash trading, all that. Good news, it's not going to last forever. Regulation is going to take care of it, and stick in there. Learn the charts while it's like this. And if you're not ready to trade yet, you know, maybe by the end of the year we'll start to see regulation, and you know, you can get in then. So, question on shorting Bitcoin. Here's the thing. Will Bitcoin drop? The most likely scenario is yes. We do have the most likely scenario is a continued move downwards. Again, we do appear to be developing this continuation pattern, a larger continuation pattern. We have both a bear flag, drop, bear flag, now corrective movement. This could be just developing a bigger bear flag. We already talked about that. It does appear to be that's exactly what's going on. So, is it going to sell? Most likely, yes. That's just the most likely scenario right now. Is it going to sell right now? Doesn't have to. It doesn't have to. So, we're at the top of this descending channel, within our descending channel, and our ascending channel within that channel. Let me just zoom in because that's a lot of channels. All right, so let me move this back here. All right, so we're at the top of this. We're forming this pattern here. Now, if this continues like this, it probably indicates we're going to move up at least short term before continuing down. Again, even if we do that, has the pattern changed? No. The pattern hasn't changed. It's just developing out. So you need to understand that. Is it ready for a short now? We do not have confirmation of the short. So if you place the trade for a short, if you shorted the market, if you're margin trading, and you're in profit, stay in. If you're not in profit, you need to make a judgment call on that. You need to decide, and honestly, you need to figure out where to set up a stop loss. Breaking above this point, you know, it's probably going to take longer for it to move to the downside. But it could drop from here. It definitely could. We have this candle developing on the hourly, which is starting out bearish. It's very small. We don't have confirmation. This could drop, but it could drop to the bottom and then come back up again before going lower. So, or it could just correct there. But at least you'd be in profit. If you're already in, you'd be in profit. So manage that trade. Watch it. Be mindful of the possibility of continuing up further before dropping. But this pattern here that's developing should drop. It should be a sell here shortly. It does appear to be what's going on. So we had a question on clouds. They're interesting and pretty. Okay, they look nice on a chart. I'll tell you that. I see people with them on the chart, and it looks cute. The little cloud goes around the price. It's kind of cute. As far as having value, I honestly believe that the confusion caused by it outweighs the benefit of it. So it can provide a benefit in providing some information as far as areas that price action has struggled in the past or fluctuated or may change. But again, the way we trade, if we have a pattern that's correctively moving through a cloud, we understand that it hasn't broken, whereas 99% of the trading world sees that as a break. So when you understand that our philosophy is quite a bit different, you understand that a lot of these indicators, their value dwindles. So I don't place a lot of value in clouds. I don't see them as a valuable point to me. If you do, that's fine. I would encourage you to back test it and take notes and explain to yourself, if not me, but explain to yourself why you feel it's valid. Because a lot of people will see it as support and resistance. But again, if you're just, for instance, so let's just say that there's a cloud here. Okay, that's just a cloud. If this just corrects like this, does that cloud mean anything? No, because we know that it's going to sell. So yeah, I think the way we teach, it kind of undermines the validity of a lot of indicators. And in the course, I mentioned a backtest study that shows that a lot of these indicators, their validity is right around 50%. So it's not an extremely good win-loss ratio. All right, so CryptoJetty asked a question. So we had a question about, okay, so if you're down, like say 70% on your investment, should you sell at this point? And the only thing I can really tell you is that's a judgment call. I can't make that judgment call for you. It's your money. I can't. And the reason is because you can go listen to a lot of channels and they're going to tell you, oh, markets trend upwards, so you're better off staying in. They don't know that. We have no guarantee that we will ever see a $20,000 Bitcoin again. I believe that it is possible, even likely, but there is no guarantee. So to tell somebody that markets trend upwards, so to go long is always the best method, is very deceptive, because you can have a market in a bear trend for years. That's not going to most likely happen with Bitcoin. But Bitcoin could continue in a bearish market for several more months or even to the end of the year. I think we're going to break out bullish before the end of the year. But again, the point is nobody knows. So I can't tell you, no one else can tell you what to do with your money if you're in a loss. What I can tell you is learn to trade correctly now. If you're in a loss on an investment, figure out what you want to do with that. If you want to hold it, hold it. If you want to sell it, sell it. But figure out how to trade now so you can recoup the losses. If you can learn how to trade, you know, correctly now, you can recoup those losses. Even if it's $5,000, $10,000, $20,000, you can recoup it. It's going to take you some time, but you can recoup it. So focus on the profit potential rather than the loss. Here's the thing, and I guess this is the point I will leave that question on. If you see an impulsive movement down forming, you know, a break from, you know, the structure we're talking about, it's impulsing down, you can sell at a loss and buy back in at a lower amount. And then if it drops lower, you can sell again at a loss. I mean, you can not sell again at a loss. You can sell again and buy again at a lower amount. And what you do is you're diminishing your loss. So, yeah, you are selling at a loss, but you're diminishing your loss because you're making profit as you're selling and buying back in. So that is one method, as long as you're selling at points where it is impulsing down. It's something to consider. But again, it's a decision you have to make. What platforms do I use for cryptocurrency? So GDX is my main platform right now. I have accounts on Binance, KuCoin. Now I'm drawing a blank here. Binance, KuCoin are the main ones for alts that I've had accounts on. I don't do much trading on there as much now. I was, but I'm not as much anymore. But yeah, I guess those would be the main accounts that I'm still active on for altcoins. There's also Bittrex. That's something you want to look into if you can get on Bittrex. So if you're not a trader and you're just looking to hold for 2+ years, would now be a decent time to buy in. I honestly can't tell you yes to that. I really can't. The way things are looking right now, even if we get a short-term move to the upside, I do not believe that we found the bottom for Bitcoin. I do think we have more lower potential. So it's a decision you have to make ultimately on your own, but I can't tell you that I think it's the best idea to buy now to hold for 2 to 3 years. It could plan out awesomely. In 2 to 3 years, Bitcoin could be $100,000, and it could have been an awesome opportunity. Neither one of us knows that. But just based on what the chart is indicating right now, I do not think that would be the best. But I honestly, you'd be better off learning to trade and try and trade the market here, and you'd probably be up ahead. Honestly, for those people who bought in at the latter end of 2017, even October, November, most of them would have made more money if they'd known how to trade and they actually traded the investment rather than holding it. Just facts. Even that large move up to 20,000, they still would have made more money on buying and selling. So if that's what you want to do, you're not interested in trading, that's fine. But you really need to learn how to trade to understand where the market is, to understand the best place to buy. There's a lot of people out there telling you, you know, that it's just going to move up, and eventually it probably is. But, you know, is it going to drop $1,000 before then? You know. Somebody asked what's going on with Crypto Nick. That is a it's a good question. He kind of disappeared off the face of the earth. As far as I know, he's still 17. He was 17 for like 10 years, so that is a plus. The kid doesn't age. But other than that, I really don't know what's going on with him. I don't know what's going on with most of the BitConnect guys. I don't really wish them well. I think they hurt a lot of people. Obviously, people made decisions, but, you know, they made money off from other people losing money, so I don't really have any sympathy for them, but I haven't heard any news as far as that goes. There's a question, if we fall to 5,000, could we see a bounce of 7,500 into the 128-day moving average and then bounce down? I don't know where the 128-day moving average is. It doesn't really have any bearing on the chart as far as whether we moved there, but that's a possibility. That's a definite possibility to get an impulsive movement down or even a corrective movement down, break out of our descending channel and move up to 7,500. The thing to look at if we do that is to look at, are we forming a ascending channel upward, or are we impulsing upwards, correcting and impulsing upwards? If we're impulsing and correcting upwards, it's a very bullish sign, and most likely means that we are going to retest 8, 9, and 10,000. But is it technically bad that the alts are connected to Bitcoin? Yes and no. If they weren't, a lot of them would be worthless, honestly. And if Bitcoin was to suddenly tank to like $1,000, I think we would see a lot of altcoins die. And it's still possible, you know, when regulation comes in, I think we're going to see altcoins die. So it's a negative and a positive, because some of these coins are garbage and honestly they need to go. But on the other side, some of them are garbage and some of us have still made money on them, you know, trading them. So if it's a garbage coin and you know it, don't hold it. But if you're going to trade it and you can make some money on the volatility, yeah, go for it. There's nothing illegal about that. But which people inspired our trading concepts the most? Yeah, I mean, I guess it would probably have to be each other. It's kind of interesting because, like we mentioned before, our journey, we're actually going to probably do a video on our journey. I don't know if we'll just release it in the course or put it on YouTube, but in our journey, as we decided to learn to trade, when I first started, I actually gave up on it because I bought indicators and I bought signals and I bought, you know, everything. A lot of you can sympathize. And I gave up because it was just a scam. And I was like, you know, people were saying, well, only 1% of traders make money and it's really hard. And even those, they're happy when they can make 0.1% and nonsense like that. And I'm just here to tell you that those people are smoking crack. So I heard stuff like that and I gave up on it. I followed other ventures. I started some businesses and they were successful. And I don't regret that. And I guess Joe actually started getting back involved in Forex, and we were talking and he kind of piqued my interest again. So we kind of bounced off each other, encouraged each other, worked off ideas together, looked at charts together. You know, he would be drawing charts and I'd be drawing charts, and at first our charts would be completely different. And then as we began to develop what we teach now, we just started to see patterns forming and understanding that, you know, things were coming together, was making more sense. And I guess the camaraderie, being able to work together, and it really paid off and helped us a lot. So I think we inspired each other a lot, and we work really well together and have enjoyed the experience. All right, so if I understand, there's a question. If I understand correctly, it is mostly trying to interpret the channels One draws to anticipate moves, guessing or preparing for one way or another. Yeah, I mean, here, if you look at the chart here on Bitcoin, so as this is, so we had this movement up, okay, ascending channel, small ascending channel. And as it transitions and it turns into a bigger movement, you're not going to immediately know what's going on. So as this is developing out, you might be saying, okay, this looks like a bear flag. Okay? And it does break bearish, but it doesn't, it does impulse, but most of this is corrective. A lot of this is corrective. But it's a bear flag. So you could already identify this as a bear flag, but as it develops out, you start to get structure. And let me see our trend line. So at first, as this develops out, we'd be like that. And then we'd come out to here. And we just develop our trend line until it fits what the structures, you know, what the chart is drawing. So yeah, it is a lot of interpreting what the market is doing and letting the market flow. It's not a bad idea to once in a while go to your chart and click the garbage can icon and just delete everything on the chart and just start from scratch. The one reason is it will force you to redraw based on what the market is looking like now, rather than forcing something that you drew, you know, a week ago on a chart that's developed bigger. So there's a question, what's the success rate of your trading strategy? The success rate of the trading strategy would be over 80%. As you develop the skill, honestly, 90, 95, even 98% is not unheard of. It's very possible. But 80%, yeah, definitely. Just because the way we teach, the way we trade is so incredibly simple that when a trade doesn't go the way we're expecting, for instance, if something's developing a bigger structure and we just, for some reason, we're just not seeing it and we're expecting it to do something different, the way we trade, it makes it incredibly easy to just get stopped out at a very small loss or break even if we went into profit and then retraced, and then get back in the trade when it actually develops a pattern. So the way we trade is a way that is very simple. There's no other trading strategy on the planet that's this simple, that's this effective. I know because we tried them. We had no intention of forging a new path or creating a course or anything like that. But when we tried everything else on the market, and it was all garbage, and we found out that the successful traders don't have courses. They don't teach people for the most part because they're in it for themselves. And it's not selfish. It's just they're making money for themselves. They really don't care to be a charity. And we realized that. And we actually started in cryptocurrency because we saw so many people losing so much money going into January that it just really cut us to see all these people that, many of these people, there's single moms, there's, you know, dads that are working 2 jobs to take care of a large family. There's dads that lost a job. There's single men and women coming out of school that put in money from student loans and losing money. And it just really, it really bothered us to see that. So we developed our YouTube channel to fit that need. And as the YouTube channel kind of developed, we realized that, you know, we had a lot of interest in a course, and we just realized we really needed to put this down on paper, flesh it out, and share it, you know, and give the other people the opportunity to learn. So that is why we released the course. You know, it was never our intention. It was never our goal or vision. Our vision was just to put up some YouTube videos and hopefully deter people from bad investments. And we've just been thrilled with the community that's formed around it. There's quite a few people that have thought we were the same person. It would be a little odd to have a YouTube channel and every other video introduce yourself as somebody new. I guess that would be flattering. But yeah, no, I have one name. Joe has one name, and we are two different people. But we are brothers, if that does help. So that is probably why we do sound similar. It is also why we are very close and able to work really well together. But definitely two different people for sure. So a realistic daily percentage increase to focus on. Not a good thing to focus on. And the reason is you need to focus on being profitable, being consistent. You know, if you have to make trades, if you're using real money, you have to make trades with $1 or $5 or $10, and you're making, on a good move, you're making a few bucks, $5 or $10. That's okay. Your goal is not to make money. Those of you who bought the course in my introduction, you know this. But our goal is not to make money. I know that sounds completely inferior to everything you want to believe. Our goal is not to make money. Our goal is to become consistent. And once you can become consistent, you can make money easy. If your goal is to make money, you will never be consistent because you'll be chasing your tail. So don't focus on the percentage, because what will happen is you'll stay in trades longer than you should to hit a percentage. You'll get into bad trades to try to make up your percentage. It's horrible. So ignore percentage, ignore profit. Don't set any goals right now as far as making money. Set goals as in consistency. If I make 10 trades this month, I want at least 9 of them to be profitable. Make that kind of a goal. And once you get there, I guarantee you the money will come. Because here's the thing. If you can take $10 and make 5-10% on $10, that's nothing. That's absolutely nothing in the scheme of money. But if you can do it with that amount of money, you can do it with $100, with $1,000, with $10,000, with $100,000. And 10% of $100,000 in a month, that's $10,000. But if you focus on that right now, you will fail. How do I know? Because I was there, I did it. Okay? When I first started to learn this, I got kind of cocky, and I was making money. I restored my account. I got my money back. I made a really beautiful trade. Made like 13%. Awesome trade, just a really beautiful trade. And I got cocky. I jumped into another trade right away. And I lost the money I made. I jumped into another trade to try and get it back, and I lost that money. So my goal at that point was to make money, and it was the wrong focus. So I readjusted my focus. I went back to it kind of a little more humble. And from that point, I just decided I'm just going to be consistent. Once you get the consistency, you will get the profit. So don't be too greedy or too quick to go jump in for that. So someone asked, why charge? I guess the connotation is, if we really care about people, why charge? There's a very simple reason. There is no perceived value in free. If you're driving through New York City, let's say you're driving through New York City, and you drive by, an office, and outside you see a box, and on the box there's a sign that says, "The most successful trading course in the world, free." You're like, man alive, I got to stop and grab that. That's my ticket to freedom. You wouldn't stop, because there's no way you would believe that a free course is the best trading course in the world for trading. And there's reason for that. It doesn't make sense. There's perceived value in paying for something. And also, if you pay for something, you will utilize it. So, yes, we could have released it for free. If we had, a lot of you that have already signed up would not have put as much effort in. It's just a fact. It's just the way we are as humans. You wouldn't have, because you didn't invest anything in, so you wouldn't have put in the effort, at least as much. That isn't true of everybody, but it is statistically true. So we created a happy medium. There are people, and I'm not going to mention names because, again, I'm not here to bash people, but there's a channel that just came out with a new course. They have several courses right now. They just came out with a new course that's priced at $925. It's on discount right now for $725. If you watch the channel, you know who I'm talking about. That is almost double what our course is, and it's not revolutionary. Everything he teaches in that course you can find on Investopedia, in a book, in a PDF somewhere, or in a cheaper course. And probably most of you can find free. What we teach you cannot find free anywhere. It's not available free anywhere. So why do we charge? Because there's perceived value in it, and we want you to value it. When you buy it, we want you to value it. And also, we don't want a bunch of people that look for freebies to join. This is a community is about people that are dedicated, hardworking people that want to make it, you know. And if you're going to put in the effort, you're going to put in the money. That's the type of people we want in this community. We want to develop a community, and someday, you know, we've talked about the possibility of having a trading floor and hiring some of the top students to trade. It'd be really awesome to do. I mean, it's kind of a pipe dream, but it's something that would be pretty awesome. But if you don't invest anything in, you're not going to value it. So that's the reason why it's not free. The channel, our YouTube channel, is completely free. We've never charged for anything. We've never been sponsored. We've never done anything paid on it. So if you can't afford the course, follow us on the channel. That's fine. But I hope that kind of answers the question, because I do understand what you're saying. When I first started to try to learn Forex, I bought a bunch of courses that were cheap, like $49.99, $79.99, $100. And they're all garbage. So it's easy to rack up $400 in garbage courses. It's easy to spend $1,000 in garbage courses, or mediocre courses, or even average courses. But we truly believe in the value in our course, and we truly believe that $400 is extremely low compared to the value that it's offered. And that's why we have a guarantee. You know, if after you go through the course and you do not, you're like, I don't have the whatever to put into this, I'm not going to commit my time to learning this, write us and let us know, and we'll address that. We have not had anyone ask for a refund on the course. In fact, we've had an overwhelming response that people have been extremely excited that it's finally clicking for them. And I'm not just trying to push the course, but here's the thing. If I'd had access to this information when I first started trading Forex, it would have transformed where I am today. Now, I'm in a good spot today, but, I mean, honestly, I spent years doing something other than Forex that I enjoyed, but I love trading. So if I'd had that information when I first started, I would have paid for it. It would have been worth it. So we had a question asking how many students we have. I don't know if we should answer that or not. I will say it's in the 3 digits. I will also say this. Our goal is to eventually cap this in one way or another. I don't know if we'll pull the course. Probably not. We'll probably raise the price. The reason being is eventually what we want to do is focus on a community, a smaller community, but a community. Again, we want to build a community of people that just get together, trade together, bounce ideas off each other, get excited about trading, and that kind of community where it just instills this desire to grow, to be better, to do better, to be successful, to be consistent as a trader, and just help each other out. So that is our goal. And honestly, I can't really see having tens of thousands of students being able to sustain that. So we want to keep the community on the smaller side. That actually reminds me of a point. We're planning on starting a Slack or Discord group. So keep an eye out for that. We will be announcing that. If you're on the mailing list, we will be sending you a link to that when we release it. Not sure yet if it's going to be for students only or the public. So we're trying to decide how to best to do that, because we do want to offer as much for free as possible, but we also do want to add value to those who have paid. So we're open to your feedback on that, but we will be doing that soon. We want an area where you can share the charts you're looking at, bounce ideas off other people. We can answer questions, do more one-on-one with you. You know, if you're struggling with something's not making sense, we can really delve into it with you. So how long is the course? I would say you could complete it in a few days. Honestly, we've had probably 3 or 4 people complete it in one day. But if I'm honest with you, I've looked at some of their charts that they've done, and these guys are dedicated. I mean, honestly, they're like leaps and bounds ahead of where we were when we started to learn this. So some of these guys are just really dedicated. So if you're that dedicated, yeah, you could go through the course in a day, just, you know, burn through it if you have a day off and you want to seclude yourself in a closet. But I would say a couple days a week, you could definitely go through the content. I would encourage you to go through it several times, go back over it, start practicing it, and just really devour it. But it depends on the person. It depends on your learning curve. But it's really developed in such a way that anyone can learn it if they're dedicated. Yeah, so one of our students mentioned that there is discussion questions in the course, and you can also see what other people have asked. So yeah, if you have a question while doing a particular session, you can drop a discussion question right on that, and we'll answer it, or somebody else in the course can answer it. And we'll also be doing that in Discord or Slack once we release that. But yeah, we're all about the community. So, you know, as we promised, we are doing our best to you know, give each one of you the best value we can. So if you're struggling to understand a particular aspect of a session, don't feel foolish in asking. Just ask. The only foolish question is the one you don't ask. You know, someone mentioned mistakes. You know, mistakes will happen. We all make bad trades. Just be careful not to get greedy when you're beginning here, because you're going to eventually, as you begin this process, especially if you go through the course, you're going to make a good trade. It's going to happen because you're going to see a perfect pattern form. You're going to get in on it, and you're going to make a really good trade, and then the potential to get greedy is going to come in. And when that happens, you're going to have to check it, because if you do not check it, you could lose money, because greed will really blind you. So be careful. Mistakes happen. Mistakes are fine as you're learning. Just understand that you don't want to be making a mistake with $20,000, okay? Make a mistake with $10. You know, make small trades or do paper trading, learn it, start out with small amounts of money, and just master it. Bitcoin Cash. We're running a little late here, and I do want to close this out. Some of you guys, you know, have work. Some of you have taken time off. So I don't want to drag this on too much longer. We're going to close this out soon. So Bitcoin Cash, remind us next live stream, we will do a chart and we'll look at it on a chart. As far as remarks on it, the only thing I'm going to say is it's not the real Bitcoin. So if there's anyone in here that believes that, the likelihood of Bitcoin Cash outliving Bitcoin is slim. Yeah, books on trading, that's something that we're going to try and add some of that stuff to the course. So different books and stuff. All right, Mr. B. So you have an open trade that's in a loss. Here's the thing with a loss. So let me just illustrate this very quickly, because this is an important question. Okay, so let's assume that you, I guess it was a short. Let's assume it's a short. So let's say you sold here. So you shorted the market here. Let me zoom in so that's a little clearer. And you set your stop loss somewhere in there. I know it's a little sloppy, but let's say you set your stop loss in there. If you set a stop loss and that's your stop loss, you can let it stop out. Obviously, this isn't moving out of the way, but you get the picture. Actually, I'll just go along with the chart. It makes more sense. So let's say that you bought here. You went long here. Let's assume that makes more sense with what the chart's doing. All right, you set a stop loss down here. Let's just assume this is something you set up. I'm not saying it's the best scenario. I'm just saying that let's assume you did. And you're expecting it to move out because you see it's correcting kind of at a sideways. This would be a premature trade, just being honest with you. But let's assume that somebody made this trade. If you have a stop loss there, you can wait for it to be triggered and then move out. If this was your trade, honestly, there's not enough data here to make a trade offer. Okay, there's no clear impulse. There's no clear confirmation. You should close the trade at a loss. The only way that would not be true is if you had definite confirmation and for whatever reason you're still in a loss, but you can see that it is going to move up. But if you had traded something like this, and if you did or didn't have a stop loss and it's trending down, it might be a good idea to get out at a small loss. Here's the thing, you know, when I was first starting, I did that too, where I was in a loss, but I'm like, you know what? It's probably going to go out. And, you know, I'd be in like a $10 loss. And by the time I finally got out, it'd be like $50, $60, $70. It's like, man alive. It could have been just a $8, $10 loss. And it ended up being 10 times that. So you can get kind of in that bad situation where you're afraid to lose a little bit of money on a bad trade, and you end up losing a lot of money. So it's hard for me to tell based on what trade you made. I don't know, but it sounds like it's probably a bad trade or a trade that was premature. Probably more likely premature. So without seeing the trade, I'm going to say that probably best to get out and get back in when the trade is let me just look at USD and oh, okay. All right, so you caught the trade going up. So I'm assuming that you're in this correction, this corrective period, at a loss. Yeah, if that is what's going on, was peaking. Okay, so I caught USD going up. So yeah, it sounds like you're in a short. Okay, and then you caught this pattern. So you caught this coming down. You saw it bounce off the trend line. Looked like it was. I'll give you it. You have impulsive candle. I will give you that. So you got in, and it's moving out, and you're in a loss. You probably got in somewhere in this area. Most likely. That's not uncommon. A lot of people do that. They'll see an impulsive candle, they'll miss it, and then they'll get in on the next one. If this type of move happens and you see it's already starting to correct up, it might be better to wait until the impulse ends and corrects upward and then forms a flag and get in on the next impulse. It depends on how impulsive. If it's really impulsive and just keeps going, you can get in. But yeah, that would be my suggestion. If you're in a loss right here, okay, so we're in an ascending channel. It is going to sell most likely. you may not have enough money in your account to hold the trade till it does. So you might end up losing more money than getting out. I would get out. I would. That's what I would do. And then watch it, get back in once it impulses out of the correction. All right, so perfect. See, I saw what you were doing because I've been there. I've been there, brother. I've been there. So that's how I would handle that. So yeah, definitely don't feel bad about that. Also understand that even though this is looking like a sell setup, it could develop out and turn into a buy setup. It's not likely. It looks like it's just forming a correction, but that is possible. It could happen. So yeah, I'm belating that point, but all right. I think we probably should wrap this up here. Just before we close, I just wanted to mention a couple points in closing. The first one is the Discord and the Slack group. We will be notifying you guys of that soon. So if you're not on our list, I believe we have the link in the description. Yeah, the link is in the description. So go ahead and get in the description, click the link, subscribe to our mailing list. So you definitely get a link to that when it comes out. That's going to be powerful. We're really excited about that. If after listening to this, this sounds like something that interests you, intrigues you, you're excited, you can go ahead and look at our course. I'm not telling you to buy. That's a decision you have to make if you don't have the money. There's some people that have mentioned, there's a couple people in third world countries that are literally making $10, $20, $30 a day that are saving up to buy the course. And we've received, these are real emails we've received. People saying, hey, please keep the price low. Don't raise the price. I'm saving up. It's going to take me several weeks. This is how dedicated some people are to changing their financial status. So if you're in the States or you're in, the UK or, one of these developed countries, $400 is not a lot of money. If you can put up the money, you're dedicated to trading, I would encourage you to try it out. Try out the course. You will not be disappointed. There's a ton of people in chat who mentioned that they've signed up and they love it. But I'm not harping on the course. I'm not just trying to sell the course. So if you don't have the money, that's fine. We're still going to be doing videos on YouTube. We're still going to do public live streams for the public. You don't ever have to buy anything. We will still treat you the same. We're still going to give away information. We're still going to teach you. It's just going to be a lot easier. And if this is something you're serious about, the course is just going to make it a lot easier. You're going to learn a lot faster. You're going to be consistent. So that's all I want to say about the course. I don't want to hype it. I don't want to harp on it, but I am excited about it. We are absolutely elated. We are getting ready to release more content for the course. We are developing several new videos based on your feedback. If you are part of the course and you've noticed some things that you want to know more about, let us know. If it's something we feel is valuable, we will add it to the course. Someone asked if we like hodling. No, not really. Yeah, honestly, it's more stressful to me than trading. But I do have investments in cryptocurrency, but they're investments that I'm not worried about. So if I lose all my money in it, I'm not worried. It's not a big deal. I bought low. If they never pan out, then it's fine. So it's not a bad thing to hodl. It's not a bad thing to invest. It's just good to understand that there's no guarantee that it will ever make you a large amount of money. It could, but don't invest $20,000 into Cardano or whatever the coin is and expect that in 2 years you'll be a millionaire. It could happen, but it's not guaranteed. And yeah, I appreciate that. You guys are happy the channel exists. We're not intending to change that. We're still planning on doing free videos. And again, honestly, we love doing what we do. So it's not about the money for us. But at the same time, we do want to give you the best. So it does help when you give us your feedback. Let us know what you're seeing, what is making sense, what's not making sense. But it's been exciting having you guys with us. I appreciate all you guys that stuck with it. Again, sorry to those of you who were part of the last live stream that were involved in the technical difficulties in the beginning. I do think we've done a better job this time. It worked out a lot better, and the internet was better. Next time, if you want to send suggestions on pairs to look at, we will write them down and look at them for you on the chart. So you can email, drop us a note on Twitter. Once Discord and Slack are out, drop us a note there. However you want to communicate, it's fine. Just let us know pairs you want us to look at the next live stream. Coin Grinder, I feel your pain. I really do feel your pain. You know, I may not have been involved in this loss here that you're referring to, but I had my losses in Forex when I first started. So I feel your pain. The problem with most YouTubers is not so much that they are con artists, although there are definitely a lot of them. You know, Superman, people like that. They're con artists. But it's not so much that they're all con artists. Many of them are just ignorant. They're naive. They don't know how to trade. They're learning as they teach you. So they're going to hit a few home runs. They're going to hit a few out of the ballpark. They're going to hit a few misses. But at the end of the day, they're learning with you. And some of them know less than you do. And you may not know that. So be careful who you listen to. Be very careful. We listen to a lot of YouTubers just because we want to hear what other people are saying. And a lot of the garbage we hear just really frustrates us. And we want to do videos exposing them. But a lot of these guys are sincere. They're nice enough guys, and we don't really want to destroy or hurt them. But it just frustrates us that they give out such bad information. Like, one of the things we hear a lot is that markets trend upwards, so you should just stay in. Well, yeah, that may be partially somewhat true. But you may need $1 million account to stay in long enough during a bear run to not get leverage, margin called in Forex or whatever. And in Bitcoin, there's no guarantees. So some of this stuff is partially true some of the time, but it lends itself to dangerous advice. So it does frustrate us. Honestly, it really, really, really frustrates us to see some of these YouTubers and how they they influence people negatively. It's like there's YouTubers that were saying that Ethereum would overtake Bitcoin, and Ethereum was going to go to $5,000-$10,000 this year. And it's like, when people say that, they don't know what they're talking about, because there's no way the chart can tell you that. And usually when people give out numbers, they're trying to make a prediction hoping it comes true. Well, Jesus, I really do appreciate that. We appreciate that you appreciate us, and that means a lot. We for 7 months we did the channel without making a dime, and now that we have the course, yeah, we make a little bit off from the course, but it's not really anything compared to the value. What we do for trading is what we get the value out of. But that being said, the reason that we did the YouTube channel was just because of the response we got. Just the people that really appreciated it, that it helped. And we were seeing people actually, they were in loss, but they weren't losing as much because they understood things better. So thank you so much for that. We do appreciate that. Yeah, just lastly about the 50,000 Bitcoin. Is it possible? Anything is possible. So is $1,000 Bitcoin or $500 Bitcoin. Is it likely? No. The thing is we need to focus on what the chart is doing. If it develops a pattern to form to go to 50,000, you're going to have indications of that in the chart, that you're developing a large pattern for a large impulsive move, large continuation. It will be on the chart. But we aren't seeing that yet. It's too early to call. Anyone who's calling themselves an analyst and making predictions like that is a clown. Okay? I don't care if they have blockchain extraordinaire under their name. They're a clown. That includes McAfee and Tom Lee and all those people. They're hypists. Doesn't mean they're idiots, but they're hypists. And they've influenced a lot of people negatively, so. Legendary Yuki, that is actually a very good point. Don't ever let anyone make a decision for you. At the end of the day, it's like, for instance, we've gone over these charts and I explained the scenarios. At the end of the day, whatever trade you make is a decision you make. And you need to make that decision understanding for yourself. Not just saying, okay, he said at this level, it's probably, then I'm going to copy that trade. No. You need to understand and see it for yourself. So when that pattern plays out, you're trading based on something you understand. If you don't understand it, don't trade it. Wait and learn it and then trade it. So that's a very good point. Appreciate that. Okay, James. So what do we think about Crypto Crew? I think the courses he offers are mediocre. I do not think that his understanding of the market is very good. He predicted in May that Ethereum would overtake Bitcoin. I would say that he's on the better end of beginner technical analysis YouTube channels. Again, I don't think he's a con artist as per se, but I do think he's naive in his understanding. And I don't really think a lot of these people make much money trading, if anything, because I will watch his videos every now and again just to see what he's saying, and a lot of times he's not understanding the patterns, he's not seeing the patterns. He thinks when you break a trend line is breaking market structure. We understand that that is actually not true. It's how you break the trend line. So I'm not here to bash him, I'm not here to hurt him. That's not my intention. I do not want to do that in any way. But you asked the question, I do want to be honest. If you looked at his courses are all more expensive than ours. He has a bunch of different courses which add up to thousands of dollars. And at the end of the day, a lot of the stuff he teaches in the course can be found free on the internet. Our course encompasses everything you need to know to become a successful trader. And anything else to add to that can be found free on the internet. So as far as value goes, obviously, I'm a little biased, so I can't really say that ours is better than his, but it is. Yeah, he does rely on indicators quite a bit, and that does influence him quite a bit. Feeling on the chart, guys, I haven't looked at anything of theirs recently, so I don't really feel like I can honestly comment on that. So I don't want to answer that without having a basis. Tonevay says the ETF won't affect the bear market. He doesn't know that. I don't know that. I would tend to think that the to-do that's being made about it is probably a little bit much. But that being said, we don't really know until it happens, because there's a lot of people that could still FOMO on it. So yeah, I would tend to lean towards that conclusion, but neither one of us knows. Until it happens, nobody really knows how news will affect the market, really, until it happens. You know, for instance, a couple weeks back here, USD CAD, the USD had great volatility. Had great volatility due to an announcement for the United States as far as interest rates. We knew that it was going to affect the market, but we didn't know how much. There was huge money to be made in that move, but we didn't know how much. So if someone had told you X of XYZ, they don't know what they're talking about. There's no way to know. But you can make, gauge based on previous history, points that it's done in the past. But at the end of the day, it's hard to really say how news will 100% affect the market. I will check out chart guys, actually. I've heard a lot of people recommend them. I do remember seeing some things on TradingView from them a long time ago, but yeah, we have a lot going on, so we don't get to watch a lot of channels. Honestly, we watch a lot of the bad channels just because we want to see what people are saying that is wrong so that we can kind of counteract that influence a little bit and do videos on our channel that kind of give the correct perspective. Yeah, I understand who Lee is, and you know, I'm not saying he's a stupid guy. I'm just saying that he doesn't have a clue what he's talking about. He's been wrong. I mean, he doesn't have a clue what he's talking about as far as Bitcoin price and where it'll go, or Ethereum or anything, Litecoin, because he's been wrong on several predictions, and nobody knows. Nobody knows. Nobody knows where Bitcoin, what Bitcoin price will be in a year, 2 years, 3 years, 5 years. Nobody knows. Nobody. So anyone who says that, I tend to classify them as a clown. Even if they're smart, even if they have a PhD, you know, a degree in rocket science. You know, if you're making predictions like that and saying Bitcoin's going to 50,000, you're a clown because you don't know. And I don't like that because it hypes people to buy in prematurely without any reason, without any basis, and those people are going to panic and lose their money. So that's why I get bothered. All right, so we've been going here for 2 hours and 40 minutes. Appreciate all you guys hanging with us. It's been a great time together. I appreciate each one of you. Appreciate the comments, the questions. Awesome group. You guys are the best. Thank you so much for your support of our channel, for the support in the course, just for everything, just being there. We're excited to really make this community the best community there is for crypto, for Forex, for trading. And that's what our dedication is. So as I close this out, if you need anything, you have any questions, shoot us a message on Twitter, through our website. Just click the link in the description to go to our course website. You can drop us a email through there. But whatever you need, let us know. We are here to help you be successful. That is our goal. So we look forward to you guys sharing more of your charts and more of what is going on with you guys as you learn to trade. That's exciting to see. Thanks so much, guys. Have a great evening. We will talk to you soon. We will probably be doing another live stream next Sunday, but watch for an announcement on Twitter as far as that goes. Take it easy, guys. Have a great evening and trade safe, trade consistent, and we'll talk to you soon. Bye.